what is that telling you when these large buyers are stepping in? And why is the mainstream, in my mind, missing the biggest story of all, which I know you aren't missing, and that is who the hell's standing for delivery? So far in June, 12, 13 billion in gold has stood for delivery, and the month's not even over. Who is doing this, and what does it mean to you?
I would be flabbergasted if they hadn't been the ones, that area of the world hadn't been the ones that was driving a lot of this physical demand away from the Americas. And we're seeing gold and silver shift. We're seeing markets developed. We're seeing new products come out. And you're seeing now finally the Chinese stepping up and saying, okay, we want to play in this international currency market, and we're going to back ours with gold, US, balls in your court. And that is a huge, huge, huge development for the precious metals industry, because I think the physical demand, I don't care what the price says, the physical demand for gold and silver have been so robust and strong that I know what the central banks think of it, and I know what the world thinks of it. And the price mechanics right now are something completely different, and they really don't reflect physical demand.
Quick favor before we begin: if you enjoy this video, don't forget to like and share it. Every like and share helps YouTube recommend this video to more people, which really helps the channel grow. Robert Kientz and Andy Schectman discuss one of the most important but overlooked stories in today's precious metals market: rising physical demand for gold and silver. They focus on large buyers stepping in and standing for delivery, especially as billions of dollars in gold have reportedly been demanded for physical settlement in June before the month is even over. Their key question is simple: who is taking delivery, and what does it mean for the global financial system? Schectman suggests that demand is likely coming from outside the Americas, with major activity shifting toward Asia. He points to new markets, new products, and China's growing push to participate more directly in the international currency system, potentially with gold backing. They argue that paper prices do not fully reflect real physical demand, which remains strong among central banks and global buyers. This signals a major development for the precious metals industry and for investors. Now, we present the clips from their interview. Before we continue to discuss this, please hit the like button, subscribe to the channel, and ring the bell icon. Thank you, and enjoy the video.
We've seen physical deliveries in gold and silver on Comex at a level really no one's ever seen before. I remember, I've been doing this since 1989, Rob, and no one ever stood for delivery. Never. Like 1%. The difference between standing for delivery and accepting a warrant, if it's you and I are the counterparties, well, here's the warrant, you own it. And I'll buy, okay, now I own it and you own it. This piece of paper that said you own it, it's a warrant, it's yours if you want it. No one ever stood for delivery, took the time and the expense of moving those numbered bars into the vault. What we're seeing right now is, no, Rob, I don't want your paper this time. Please send me the numbered bars right away to my account. Now that's different than an offload. An offload is sending it out. Like, for example, in February, 26 million ounces of silver were delivered, following what we've seen now going on 18 months of billions of silver and gold delivered every month. But 39 million ounces, which is almost 2 million pounds of silver, or over 2 million pounds, got on trucks and drove away. $4 billion worth of silver left the exchange, 160% of what deliveries could explain alone. Now, that doesn't happen every month, but my point is, when bars are delivered, many of them still stay on Comex, but the fact that these traders are saying, I want the numbered bars this time, thank you, not the warrant, what is that telling you when these large buyers are stepping in? And why is the mainstream, in my mind, missing the biggest story of all, which I know you aren't missing, and that is who the hell's standing for delivery? So far in June, 12, 13 billion in gold has stood for delivery, and the month's not even over. Who is doing this, and what does it mean to you?
Yeah, it's funny you mentioned since 2020, gold and silver deliveries have been elevated, and there's a great chart on Gold Charts R Us, which I always use. Nick Laird does that site, which shows that we're on a different tier of deliveries. Even on months that aren't big delivery months, we get more deliveries than we did in those same months. And in particular, June's always been a big delivery month for gold, May for silver, because that's when prices seasonally tend to weaken a little bit and you'll get more deliveries. But Andy, those delivery numbers are absolutely huge. We're getting December-like delivery numbers in gold in June. And that is just a huge change from what it was before. Now, as far as who's doing it, I think it's sovereigns. I think a lot of countries are in there playing. They're going through the bullion banks and they're getting deliveries of these gold and silver contracts because they need it. I think industry is in there a little bit. China, the BRICS nations in particular. I was just on a video I was recording this morning for my channel noted how Zhajun Bai, who's a big commenter on precious metals in Asia on X, who's worked in the industry, has said that China's ready to go international. They're internationalizing their renminbi, their currency. They're going to challenge the dollar as a reserve currency with the renminbi, and they're going to back it with gold. And all the gold that they have is going to back that international valuation of the renminbi. And now ABAX is establishing a new physical delivery market in Singapore. So Asia is coming more into the focus. And I think that I would be flabbergasted if they hadn't been the ones, that area of the world hadn't been the ones that was driving a lot of this physical demand away from the Americas. And we're seeing gold and silver shift. We're seeing markets developed. We're seeing new products come out. And you're seeing now finally the Chinese stepping up and saying, okay, we want to play in this international currency market and we're going to back ours with gold, US, balls in your court. And that is a huge, huge, huge development for the precious metals industry, because I think the physical demand, I don't care what the price says. The physical demand for gold and silver have been so robust and strong that I know what the central banks think of it, and I know what the world thinks of it. And the price mechanics right now are something completely different, and they really don't reflect physical demand.
When I listen to you, it just makes me feel all warm and fuzzy, Rob, because you reinforce the things that I believe. The expansion of the Shanghai Metals Exchange ecosystem into multi-jurisdictional vaulting systems, Hong Kong, done. Important? Why? Because when gold comes out of China, it must come out of Hong Kong. Expansion into Saudi Arabia, into the United Arab Emirates, into Switzerland, into these parts of the world where they will connect with the exchange in Singapore, the exchange, the new one that just issued a new contract in United Arab Emirates, the BRICS vaults, with the new one in St. Petersburg, with the new one in Mumbai, with the Brazil, all of these vaulting systems and clearing systems, which is a big thing. They clear, they vault to challenge the West. And I do believe, as the Oriental Ghost by Jingshu, I think you said it. I don't pronounce his name, but I do read him, and he's fantastic. And I didn't see that one, but I've checked that one out. But he's right, in my opinion, and they're calling it the expansion of the renminbi, but part of me also feels like it's really expansion of the BRICS, that China is front-running to not gather the ire, if you will, of President Trump talking about the BRICS. But I think it's a huge deal. I couldn't agree with you more. 100%, again, just reinforces what I believe, makes me feel good.
Today's conversation focuses on one major shift in the gold and silver markets: growing demand for physical metal. We discuss the surge in Comex deliveries, why more buyers are requesting numbered bars rather than paper warrants, and what that could signal about trust in the current financial system. The interview also explores who may be behind this demand, including sovereign nations, central banks, industrial users, and the BRICS countries. We look at China's efforts to internationalize the renminbi, the role of gold in that strategy, and the rise of new vaulting and clearing systems across Asia, the Middle East, and other key regions. If physical demand continues to grow while paper pricing remains disconnected, the implications could be enormous for investors and the broader monetary system. Let's get into the interview.
Moving to the central banks, they probably are behind it. And whether it be the Exchange Stabilization Fund and run by, the current chairman of the Treasury, Besant, it wouldn't have to get congressional approval, or it's the Chinese central bank or others acting by proxy, maybe like Tether, which I'm going to get to on the next question. But the central banks are the ones that issue the currencies. Yet these are the same ones that have the best economic data. They keep buying the one asset they can't print, gold. And I think, to me, the message is simple. They know that fiat currencies are being debased. They're positioning their own balance sheets for something. Could it be a gold revaluation? I don't know. But my question to you is, how important is that in your belief structure when the most well-informed and well-funded traders in the world, who are the ones that issue the gold and issue the economic guidance, are the ones driving the gold price?
Yeah, it helps to follow the lead dogs, or what we call the sharps, and in the industry, use a Vegas term. The central banks are the sharps. They do have all that information. If you just look at the Fed's FRED database, I mean, any economic statistic you want, pretty much you can get there, and they know exactly what's going on. And the fact that the central banks are buying so much gold again, I've always said that I think that they're going, when the fiat currencies eventually die, which they will, because they always do throughout history. The first one was issued in 1158 in China. It didn't last very long. China tried a second and then basically stopped for hundreds of years on that idea because it doesn't work. Eventually that dollar system is going to die and they're going to reset, and they got to use gold as a way to do it. And I think they're going to try to lead us into that digital currency age, not the digital currencies we want. The digital crypto sovereign, we want to call them CBDCs or stablecoin based. And I think that, if we want to continue to have honest and sound money in the United States, that we have got to focus on alternatives. We got to focus primarily on gold and silver. I think those are the most valuable. Some people want to do Bitcoin. Personally, I think it's the precious metals because of their history and because the lack of counterparty risk. And we know doesn't allow somebody to control it because it has a physical component. I think that is so important. And I think we just have to remember in the gold and silver industry, all of this stuff you hear in the mainstream financial media about what's going on often has a bit of a grain of truth, but also a big heaping or a dose of deception. I was reading an article on Yahoo Finance this morning that said that the devaluation trade is gone. And the devaluation trade, as they're defining it, is people investing in assets other than US dollars and treasuries like Bitcoin, gold, and silver, because they don't believe in the dollar treasury system. They're declaring that dead. And they're saying that the new Fed chairman is going to solve everything, that he's going to do some rate hikes to deal with inflation, and that his focus on price stability is going to solve the current debt crisis, which it can't. By the numbers, it's physically impossible. I wrote a very long article on Substack about that, where I looked at all the policy options, the top 5 policy options the Fed has, and why every single one of them leads to debasement of the currency and inflation. But that's not the narrative. And that has a lot to do. The US dollar's rise in 2026 on the US dollar index, and that thought that the Fed has solved the debasement trade and has put the focus back on the dollar and treasury and that they're strong is what has led it's been a big catalyst in what's happened to gold and silver. And the announcement of Kevin being the nominee on January 30th was the same day that we saw the big gold and silver pullback. So they're related. And the US markets are buying into this thesis that this economy can go forever, that US corporations can take on excessive amounts of debt and be okay, that the private equity failures, which are bankrupting corporations and companies and hospitals across the US, is not going to come home to roost. They're banking on American exceptionalism. But Andy, the problem is that no country's ever come back from the debt levels we've had in history. And no country's ever been able to run a purely fiat currency for more than an average of about 50 to 60 years, and the debt levels haven't gone away. And it's clear that when Trump and his son come out and say that we need to take the system digital, all of it, the entire financial system, not just the currency, digital, that they're announcing the end of the current system. It's a very light reading behind the lines. You don't have to be Nostradamus, right? If they're telling you they're putting in a new system, it's because they know the old one's broken. In fact, Trump said the existing financial infrastructure in the US is broken, and that includes the currency, and it includes treasuries, and it includes payment systems. It includes valuations of prices. It includes all of it. And the government has basically told you this system is broken. We're bringing in a new one, and we're going to digitize.
So when you step back, the message is bigger than gold, silver, Bitcoin, or even the dollar itself. The real story is trust. Central banks are quietly preparing for a system they understand better than anyone, while the public is being told that debt, inflation, and currency debasement are under control. History keeps reminding us that fiat systems do not last forever, and when governments openly discuss digitizing the financial system, it usually means they already know the old one is failing. That is why watching what they do matters more than listening to what they say. If the most informed players in the world are moving toward assets they cannot print, ordinary people should at least ask why. This is not about fear. It is about awareness, preparation, and protecting value in a changing system. So take this as a reminder to think independently, study the signals, and decide where real financial security comes from. If you found this breakdown valuable, hit the like button, subscribe to the channel, and share your thoughts below because this conversation is only getting more important.